Hey guys, welcome back to Smart Trader. This is Paul and thank you so much for all your love and all your support. And in this particular video, I'm going to talk about the 5 different concepts which makes your futures trading better than our equity trading. So if you are a beginner in futures trading, you may know these facts, maybe 1 or 2 of them, or you may not know few of them. So therefore, in this particular video, we will discuss 5 different concepts in futures trading. Number 1 on my list is brokerage is less in futures trading. Yes, when you compare your futures trading with your equity trading, the brokerage is less in futures trading. I would say even when you compare with your options trading, your futures trading brokerage is comparatively less. So if you want to check it out, just go into your Zerodha brokerage calculator or whichever broker you're using. Just hit it in Google, open the calculator and type, let's say 100 quantities in equity, 100 quantities in futures. And you see your end results, the brokerage is less because of other transaction tax and all those are lesser in futures trading. Also, equity, delivery, CNC trades, when you hold it as a next day delivery, you have to pay more brokerage compared to intraday brokerage. But in terms of future, even though you hold it for 2 days, 3 days, or how much ever days you are holding, you don't pay extra money, you pay the same small brokerage. Point 2 on my list is futures can be sold first. Yes. Now, for example, equity, you can buy it and you can hold it for tomorrow, it becomes a delivery and so on. But remember, equity, cash and carry, you cannot sell today and hold it for tomorrow. You can't do delivery like that. You need to close your trade same day, intraday. But in terms of futures, you have this additional benefit that you sell today, and whether it's intraday or you want to hold it tomorrow, you can sell today and you can hold it for tomorrow, day after tomorrow, how many ever days you want. Yes, there is an expiry date, at least till then you can hold your sell position and later buy it to close the position. So therefore, if you predict the market is going to fall or the stock is going to fall due to various reasons, that's when you can short a futures and hold it, so that when your futures come down, you can book your profits by buying from the low. So you can sell first and buy later some other day. Point 3 on my list is futures can be rolled over. Yes, what is this rollover? I have made a video already on my YouTube. Just go and check out rollover video. You'll get to know the meaning. So in case you think Reliance is going to go up in 6 months and you want to hold the positions in futures, then for example, what you will do, for example, you took July futures, you will close your position before the expiry. Last Thursday is the expiry for July. So last Thursday, one day before, on the same day before the market close, you can just sell your position and then enter into a new position. Let's say August month futures. Considering the brokerage is very minimal, you will close your position and you will enter around the same price. That's how we roll over. Later, after 5-6 months, when Reliance goes up, your futures also goes up because it's almost the same. The underlying asset, it moves based on your underlying asset, the future. So therefore, whenever it goes up after 5-6 months, that is when you can book your profits. That's how you can take advantage by rollover. Point number 4 on my list is futures have higher margin compared to our equity. So in equity trading, you get a leverage for intraday, yes. In futures also you get good leverage, maybe more than equity. But let's say when it comes to CNC, you have 100 rupees. Let's say if you have 100 rupees in your hand, you need to buy for 100 rupees only. But in terms of futures, you can buy more than that. For example, if the share price is 100 or whatever the lot size is 100, you hardly pay only 20 rupees or 25 rupees. So you have to pay only the risk exposure margin, let's say 25-30% of the overall value. So if it is 100 rupees, you may pay 30 rupees and you can hold your one lot of so-and-so trade. So with less money, you are trading more in futures. So there is always a benefit in futures. That's the reason you see a lot of crowd are into futures trading more than cash and carry, holding a position, paying delivery charges. They hold a future position with less money and they maintain their margin in their account. Last point and the 5th point on my list is that futures trading are traded more compared to our equity or cash segment. Futures and options, that is derivatives, are traded higher. If you see all over the world or even in India, if you see the trend, futures and options are traded more compared to your cash segment. Yeah, because considering the brokerage is less, the liquidity is higher, more number of people are there, easy to execute your orders. So it is very easy to trade. I'm saying trading is different, investing is different. So more number of people trade on futures and options, considering the liquidity, considering the brokerage, considering the margin they're getting. So the number of people trading more are in futures. So if you're planning to avoid futures, then I would say it's a bad idea. So first, understand the foundation equity. Once you understand it thoroughly, next is futures. So get into futures, understand futures. Once you understand futures, I think options is your next target. Hope these 5 points helped you guys to understand. This is a quick video just to make you understand the concepts of futures. So like this, we can make more concepts on options or commodities or something which will help you guys out and you can investigate more on these topics which I have mentioned. So thank you so much for watching this video. See you soon in my next video. Till then, take care. Bye-bye.